This conference will now be recorded.
I'm an SD guy, having around 15 years of experience. My location is in, I'm in US.
Okay. Yeah. Shashi, please go ahead. Yeah.
Yeah, hi, I'm Shashi. I have, I'm an SAP consultant. I've been working in SAP 15 years. I have SAP SD, CRM. I also have Ibris billing experience. So I'm looking forward to learning RAR. Thanks.
Okay. Yeah. Deepika, go ahead, Deepika. Deepika, we can't hear you. You do one thing, Deepika. Meanwhile, you try to rejoin once. Okay. Yeah. Sudhakar, please go ahead, Sudhakar.
Yeah, hi. Good morning. So I'm from India. I have 10 years of experience and I'm a CRM.
Okay. Yeah, Venkat, you can go with your introduction and you can present your PPT.
My name is Venkat, and I do have something around 20 years of experience. So for the last, initially I worked with sales, OTC, and now for the last 6 years I've been working on RAR. So this is predominantly my experience. Yeah, I hope you all the people have a sales experience. So when it comes to the RAR, so let me just share my screen. Give me a second, I'm sharing my screen. Yeah, Naveen, how to minimize this?
You can draw I mean, what you are able to see, you can click on hide everyone, okay, so that you can, or else you can see a arrow symbol.
Okay, got it. So that's fine.
Okay. Yeah, can you keep the PPT in the presentation mode?
Yeah, should be right.
Yeah, thank you, Venkat. Yeah.
I hope you all know about how the revenue will be recognized in old era of the SD revenue recognition, right? Or do you would like to have a brief overview about that too?
Overview about what?
About of old SD revenue recognition before IAR, or we can say that before IFRS, how the revenue would have been in the business case and how the revenue would have been recognized in the SAP system.
The old one. No,
Yeah.
I think I'm good.
Or everyone is good?
Yeah, I'm good.
I think I'll take it to the IAR. So in the old revenue recognition, or we can say that in before the IFRS, how it would have been over there. Whatever the order line item value, so the system will take those values, either if it is the event based, directly at the time of the invoice, it will get recognized, or if it is a time based one, so it will take that line item value and it will be split into the period wise and it will go and it will post it as well. Yeah. So, but when it comes to the IR, or we can say that when it comes to the IFRS, the recognition method or the recognition process has been changed. So whatever would be the line item value in the order level. So order means it can be a sales order, it can be the BRIM process, BRIM solution quotation or provider contract, those orders, if somebody is there from the CRM side, and whatever is the order there on the CRM. So if we have an order, if we have a multiple line items are there, so each line item contains some of the values, but that is not actually the revenue to be recognized. Even the order line item level, if we have $100 first line item and second line item is also something around $150, it's not the system or it is not the value to be recognized for the first line item $100 and second line item $150. So these items value, that is the total contractual value is here, or otherwise total contractual or total order value is $250. These $250, according to the SSP value, standard selling price. So that according to that value, so the $250 has to be reallocated. So in the reallocation, that is called as allocated revenue. So the allocated revenue, it can be the first line, it can be only the $40, and second line, it can be there $210. So that would be the value of the revenue will be recognized for against the each line item. So this is the what IR or IFRS new guidelines, it's what it says. Why it says like so here? If you take any simple example will be there. If you take the phone, and as a standard example, we can take it up. If you take a phone along with the bill plan we have taken. So this is the 3 years contract. So the phone value is $1,000. And so that has been given as a free, or we can say that only for the nominal fee of the $20 they are giving. But we are in the contract for the next 3 years. So some value they will charge for the bill plan for the monthly fees here. But whatever the service provider, even though he is giving as a $1,000 phone, he is giving only for the $20, but he is actually getting the money from the service, right? So in that case, the actual selling, if you buy the phone is individual, it will be $1,000, and the bill only the service we get it will be very less cost will be there. So in the order level, if you see that the phone only $20 it will show, and the bill plan it will show some values here. But when it comes to the revenue, the phone revenue is not only the $20. It will be recalculated in RAR, and then it will assign more revenue to the phone and out of the total contractual value, and less portion would be for the billing will be assigned this here. So that's one thing which will happen. And the second thing is how it will happen is based on the performance obligation. What is the performance obligation is each individual the obligation by the service provider. So that's the one thing we will take up. According to that, how many items will be there? Generally, those many performance obligations it will be done. And in some cases, other cases also we can say that if we have a warranty there, so we bought a product. For that product, we bought it for the $100, but we have a warranty there. So the seller, first time he delivered, and second thing is he is still liable for the warranty. So for the warranty also, he should keep some money, some portion of the overall product value as a, he has to keep the revenue, and that revenue will be recognized after the end of the warranty. It will be because of he is supposed to, because if something happens, he has to come and he replace the product, or he has to provide some service for that one. He is still some cost, or we can say that he still has to deliver some of the services or the product for the same one only. So the product cost is including the warranty portion of the services. He has to keep it some revenue that should not be recognized at the time of the sales. It has to be recognized when he fulfills that service. That is nothing but a performance obligation, we call it here. So those all the things will happen into the system here. So that's where here from the source system, the RAR application earlier it will be on a different server. Now we did on the same application, same server, sorry. The source from the source document. Source document is nothing but is here. Either the sales application is there, is the sales. From all the levels of the sales order, delivery, and the invoices, all the levels, the system will transfer, the application will transfer to the RAR. So RAR, first initially it will do the recalculation, and then it will create an RAR contract and POBs. Within the POBs, it will have an allocated revenue will be there. So these allocated revenue only will be recognized. If it is event based, at the time of the one-time fulfillment is done, that time it will do. If it is a time-based, so time period, it will go ahead and it will do this here. That's what it is. In this diagram also, this is only the model of the RAR it will show is here. What it will show is here. First, it will identify the contract with the customer. Then it will identify that how many performance obligations should be there. So if you take is the warranty cases here, so we have a two performance there. One is the initial product, and second one is the warranty value what we have this here. Or otherwise, we can say that in the other cases here, it will have only the two items. Other cases, phone and bill plan, billing plan example. So even the two are there, those two performance obligations, the revenue will be reallocated, and the allocated revenue only will go for it. In the third step, you see that determine the transaction price, and in the fourth step, in the determine transaction price, where it is here. In the fourth step, we allocate the revenue is here. So the revenue allocation will be according to the SSP percentages, right? So whatever the revenue is allocated here, those revenue in the fifth step, it will go ahead and post it here. In the first step also, if you see that in old SD revenue, if you have a one order, or if you have a one invoice is there, so only for that invoice, whatever the line item value is there, it will go ahead and it will be here. But in this case, we are actually taking all the line items of the total contractual value, taking into this one, and then we are reallocating this revenue. That is the one way. And second thing is, even the customer can have multiple sales orders he might have been created. So initially he bought a product, and after a month, you might have bought a service, or we can say that the relative product or some other product is bought it within a short period of time, maybe 1 month or 2 months time. Even in that case also, we consider all these things into the one revenue contract, and it has to be reallocated for both the sales orders, whatever it is happening within a short duration of the time. So that's the reason they mentioned as identify the contract with the customer is here. So his customer with initially come with the one order, where is one sales order he created, the product he bought it. Then later on he bought it with some service or related to this one. So all the orders will be considered into one document, and then do the reallocation, and then it is here. So that's the way it's more of the IFRS or RAR, how it will work is here. So the source systems can be of any system, but it can be generally SAP Sales and Distribution or the SAP S4HANA, or it can be the BRIM system, or it can be service also. From these are the three systems actually would be the inbound system to the RAR. So once the order is created, so then it will create a RAR contract and POBs. Immediately we calculate the revenue allocation, allocated revenue, and everything will be calculated, it will be ready. If it is the event-based revenue recognition, once we do the goods issue, so then it will send in one more RAI. So the integration will happen. Once it is done, we call it as a RAI, revenue accounting item. So that revenue accounting is the fulfill item, so then immediately the revenue will be recognized. If it is the invoice item, from the invoice also, the invoice rights will be created and it will send to the RAR. So then system will actually take that invoice amount as the invoice amount also. So this amount is actually be useful to calculate the deferred revenue or the unbilled receivable. So what is the deferred revenue is here? If you take a scenario, if you take a scenario, order value is 100 and we build $100, we have billed it, but only for the revenue, as of now, it is recognized only the $40 is recognized. So in this case, the recognized revenue is less than the invoice value. The $60 would have been our deferred revenue. right? So we have invoice, but it's not whole invoice value is not recognized as revenue. So then that will be the deferred revenue. And this the opposite one is the unbilled receivable. So we have recognized revenue, but still we have not yet invoiced that much. Then in that case, that is the unbilled receivable. So those two things will be calculated once calculated. So then at the final step, we in the IR itself, we run a batch jobs. So these batch job is actually post the revenue here. So this is what pretty much in the IR side, how it will go is here. So any questions as of now what we have gone through?
Hi Venkat, can you hear me?
Yes, you can hear you.
All right. So this is Deepika. I have a question, Venkat. So actually, I know you explained some part of it, that there was old revenue recognition model and now we have our IFRS, right? So what exactly, why there was a need actually to go for the IFRS? I mean, why we did not continue with the old revenue recognition model? Meaning, at any given point of time, how revenue in our books would be different for both the models.
Okay, so let me open one Excel and then I can show it to you. Order and I have items, item 1 and item 2, item 3. Okay, so this is
Venkat, your voice is going up and I'm not able to hear you properly. Sometimes it's going up, sometimes it's going down. Is it only for me or?
problem.
For me as well, yeah.
Let me connect through phone, just give me a second. Can I log out and log in again?
So
Sorry,
Venkat,
what's the issue? I didn't get it actually.
His voice
I
is
think,
going up and going down.
Okay,
So
Venkat voice. Huh? Okay. Venkat, can you rejoin once, please?
1 second. Yeah, can you hear
Venkat,
me
can
now?
you able to hear me? Yeah, we can hear you.
Yeah. Okay. Is it clear?
Ramya, is it good, Ramya? Ramya Govind.
yeah,
Okay.
it is a lot better now.
Okay, good. So 15. Let's do it. So here I have taken one order. In this order, I have a 3-line items are there. That's a simple one I'm taking over. Okay. The first line item value is 100, second is 150, third one is 250 are there. So in the old revenue recognition, what will be done over here? If it is the event based, the first line item revenue is $100 only. Suppose this one, I take that, Control X, Control V.
Okay, when you say event based, you are referring here that is a service. Is that you're saying?
1 second, I'm coming over here. So this has a phone, this has a data service, this is the stock plan. Yeah, can you come up with your question, please?
You mentioned event based, right? What exactly you're mentioning here? Event based means?
Okay. Okay. So in the old one, so if item category level, if you see that revenue recognition method would be there. So if you see that revenue recognition method, if you maintain that is the blank, what will happen? When you invoice, from the invoice, the revenue recognition, the revenue account determination will work, and then it will go ahead and it will post to the revenue, right? So in this case, what will happen? So for that one, it will the same value will go on, it will post as the revenue, correct? This is the $100, and this is the 150, this is the 250 will go. As per the old one, whatever the value we have here on the either the order level or the invoice level, so it will go ahead and it will post into the revenue accounts. That is the first point. Second point, in the same account, in the same item category level, we have other options too are there. A, B, D are there, right? So are you aware of that one?
Correct.
Okay. So
you can just show us one time so I can also refresh. I know in the item category we have the revenue recognition related configuration is there. It will be showing like blank A, B, C, D.
No problem. That's the reason I'm here. Okay. I'm taking as a standard item category. Okay. In the standard item category, you see it here, revenue recognition. So now it has been disabled, but in ERP and before RAR HANA, you can set it over there. If you won't set it anything, this is the standard revenue recognition. That means whenever you do the invoice, from the invoice, revenue account determination, it will trigger. So the system will post the revenue to the determined accounts as a standard over here. So in the invoice level, if you have your order is $100 value, the same we have done the invoice, it will go ahead and it will post it. Right? And second thing is, if you see the D, it's a billing related, time related revenue recognition. So if you suppose this is the one is phone, how we do it? Only the one time we just do the delivery, correct? So this we can expect as a blank. If the date or talk to plan is there, these two are, we are in a contract.
Okay.
For 3 years contract we are there. So you have done the customer can pay monthly, he can pay, or he can pay at one time also he can pay. Suppose we have a contract and the customer is paying for the whole 3 years in advance, right? So how much is the billing value? Billing value is 200. But this one, we have a billing related, time related revenue recognition. That means if the contract is for the 3 years, this $250 of the invoice will be recognized over the period of the 3 years. That means 250 divided by 36 months. If I'm taking it as the whole 3 months, 36 months is the equal days. Equal days in month, it's not like that. It's not starting from the mid of the month. It will start from the start of the month, and then so anyway it will end of the month also. 36 months, so 250 by 36 would be that would be the each month revenue. Got it? So the difference between A and D is A is from the sales order it will do, right? No need to have the billing. From the D is it will take it from the billing document, right? That's
Okay.
only the difference. Okay, so that is the word SAP is. But primarily when you see that, whatever may be the case is that, whatever the value is there on the either the invoice or the sales order line item level, that is the value it is going at into the posting. But when it
Sorry,
comes to the IFRS, yeah, go ahead.
sorry, Venkat. Can you please repeat difference between A and D that you said? Sorry, I missed it.
Okay, suppose we have a sales order value is $250 is here, but when it comes to the billing, okay, so you have invoiced only the $150 you have invoiced is here. So if it is the D, the system will, from the invoice, whatever the invoiced values are there, those invoice value it will take it and it will recognize the revenue. In this case, I invoiced $150. The $150 with respect to the billing document, it will go ahead and it will post it. If it is A, the system, it doesn't require any invoicing document to trigger the revenue recognition. It will take it from the order, whatever the order value is there, it will take it and it will post it itself. Because of this is the time related one. It has only the start and end date. Suppose this is the contract is starting from the Jan 2020. Suppose I'll give it here. This is the one. December 2023 is the starting and end 3 years. Okay. If it is A method, from the I have not yet done the invoices here. So in this case, it will start from the December 2023 itself. The revenue will start recognizing itself. If it is the D method, the system will wait till billing, and whenever the billing is done, from the day it will start the revenue recognition. And whatever the value amount I have done the billing, so that is only the thing it will take. For the method A, the reference is from the sales document. For the method D, the reference is from the billing document. Have you ever seen the VF45, VF46 transactions?
Yeah.
Yeah. So VF45 is for the old revenue recognition. Okay. Because of he cannot be executed, we take it out of to S4HANA, right? Yeah. So if method A, it will take it from the sales document. With the sales document, how many line items are there? Each line item value. It will take it is for the A method from months to start date. So it will divide into the, it is spread over the over value of the 100, 150, 250 here. If it is a method D, whatever the invoice is done, from the invoice only, it will take the values, it will do the spread according to the time period. So are you clear with that?
Yeah, Venkat. Yeah, thank you for
Hello.
answering that. Yeah.
Okay. Right. Yeah. So when it comes, this is the what in the SD was here. When it comes to the RAR, how it will do? RAR will not take this as the revenue amount to be posted. RAR, these amounts, the total contract value is 500 in this case. This 500 will be reshuffled according to the SSP percentage. It will recalculate it will calculate the allocated amount. This allocated amount total would be the 500. Mistake. Total would be the 500. So this revenue might have been 50. This revenue might have been the 200. This might be 75. This might be 125. So total would be the 500. This is the way it will recalculate. Or we can think about this scenario like that. If I sell my phone individually, my cost is $1,000. If I go for a 3 years of service, we'll go for per month 1,200. If I take it, just how much it will be? 20 into 36. Yeah, 720. If a customer individually he purchase, I sell it for this 1200. Let me take it as 1200, and this one I'll make it as $25. Right? So this is the individually if I sell it to them. If a customer he bought it both together, so I'm giving a some discount. Like that, the way I am showing it is here. Hey, this phone I am giving only for the 200, but my plan charges and everything would have been from 1500. I'm charging it. So total, he is getting a some discount. He is also wise and sum of this is one. So we are offering as a bundle price. We are offering as a 1700. But for our customer, we are invoicing for the customer is with against the phone $200, and again for this one is we are showing as a $1500. This we anyway we go ahead and bill it month by month. We'll bill it. But actually, if we sell it individually, so this is the way we are doing it is here. So then, if in this case the how if it's a old revenue recognition method, the revenue this for the 200, the moment we sell it to the phone, we give it to the phone, and this would be the 200, and this is the 1500. Month by month, it will recognize the value. The whole value, this is the 1500, but it will not do like so in IFRS guidelines. Even though we have shown it is for the 200, the actual revenue should have been according to the original price. Here, with the expectation of, with the hiking of the billing value, we have given a more discount is here. But we are getting the sum due to this, we are getting the more revenue is here. Showing the phone is a less price, we are getting a more bill plan. With the bill plan, we are getting the more revenue. So the revenue should have been calculated. That is the what here is the allocated revenue is here. The allocated revenue will happen. This way it will happen is here. So 1200 divided by 1700. I'm just doing a percentages here. Don't worry. Okay. One second. I think I have done some. Okay. If you see that, this is the total of the 100% only. 100%.
So Venkat, on what basis are you doing this allocation? I mean, the percentage calculation.
Yes, correct. This.
No, I'm asking actually on what basis. What's the base? I mean.
Yeah. 1 second. Coming down to this one.
Okay. Sure.
Yeah. See here. Okay. In the initial step, I found if I sell this product, this is the phone and this is the some service of some plan. So we both are sold as a bundle for the $1,700. But we have shown to the customer this is the $200 and this is the $1,500. This is the way it's here. Okay, so now we are finding out the, if I sell it individually, this is the $1,200 and this is the $700. Now we total value is $2,100. Out of this $2,100, now we found the what is the ratio over there. So the first one is $1,200 out of the $2,100. It is the 57.14%. If I show it is in a percentage, that is the 57%, and this is the 43% is here. This is the total is 100. This is the total 100% is here. So when it comes to here, I don't need to enter the 100. Yeah. Okay. So the SSP percentage, this is called as the allocation percentage. We call it. The allocation percentage is actually tells you that what is my this line item, what is my item, the percentage out of the total SSP is here. This is the called as a SSP, standalone selling price is here. The 1200, the phone percentage out of the total is 57%. And for the 3 years, this is the 43%. So according to this percentage, my total contractual value is 1700. So that's the what I spread it over here. These are the values has come. Now, these are the allocated revenue values. This is the way the companies should recognize the revenue. Even though he sold this for the 200, he has to book the revenue of the $971, cents, whatever it may be. $971 has to be recognized the revenue. Even though he invoiced the customer for the $1,500, $728 is the revenue. Yeah, go ahead.
Yeah, Venkat. So in this example, even though we are showing 200 and 1,500 as the price to the customer, the SSP is 1,200 and 900. Is that you are saying?
Yes, correct.
Okay.
So Venkat, let's say on phone, so I think 3 years you have, that is for the data and services, right? But then on phone, let's say if you are also offering some free maintenance, okay, or maybe some upgrades or whatever it is, okay. For those, you can't recognize the revenue upfront, right? There should be some deferral also that we should do. So that's one thing that I would like to know. And let's say if there is some additional discount, let's say coupon or anything, okay, promotional discount, seasonal promotional discount that we are giving on one line item only, let's say, how would that be treated? Yeah.
Okay, so first one, what you are saying is, can you repeat again?
Yeah, let's say if there is a deferral also that on phone for some services that
before
we
the
are
deferral,
offering.
you mentioned something, right?
Some warranty or some kind of warranty for 1 year.
Okay, warranty also you have some $100, and now the system has to calculate what would be the percentages here, and you have to keep some amount for that one.
So the price is included.
Yeah.
Sorry.
Yes, sorry, go ahead.
I was saying the price is included in phone list price, not separately. We are not charging separately for that. Let's say for 3 months, we are giving some cloud services, let's say, right? Or anything, hardware support or anything, 3 months for free.
Okay. So either here you can show it as a 0. That is the 1K, 1 day. If you want to be specific, if you have on the source system in the sales order, if you are specifically showing as a line to warranty, so that you can show it as a 0. Or if you are not there also, in a RAR also, it can determine the one more POB. Actually, in the first case, we can see that these are the 2 line items are there. For each line item, one POB will be created in RAR contract, and this is the way it's done. In this case, if you show it is here, you have a line item on the sales order, and one more POB will be generated. For that POB also, some revenue would be here. even if it is not also, without the line item is here, we can create an additional function. So we can create a POB, and that POB will have some revenues here.
Okay, now
So
since
in
you're
this case,
talking
if
about POB, Venkat, I don't have understanding, but out of curiosity, I'm asking. So for POB, is there any guideline from the standard revenue recognition point of view, like how many POBs should be created and on what basis the POB identification happens? Is there any guideline, or it's like whatever delivery, whatever number of items we are supposed to deliver, for each item there should be one POB created?
okay, so POB is all the business one is here. So what we can say that as of this one is, whatever the individually the what we can say the fulfillment from the vendor side or the service. Suppose our company is a vendor, we are servicing to the customer. So it says that how many fulfillments we are supposed to do that one. So those things would be there. So this is all part of the from the business wise how they need to recognize the revenue. So that's one here. In this case, you are saying that home delivery is the one fulfillment, and warranty is another fulfillment. So warranty is not done till the end of the warranty period. So that means that we have not the vendor has not fulfilled his service, and the 3 years bill plan. So it's continuously he is fulfilling. That's the reason we are recognizing the revenue. This is $695. Is month on month we are fulfilling. So the
So in this
phone one,
scenario,
we just fulfill them. Yeah.
in this scenario, Venkat, where we have warranty for $100 in your example, right? So how the revenue treatment would happen for this one? Would that be entire amount will be deferred, and at what point in time we'll be recognizing? Because that warranty is for, let's
Yes.
say, 3 months or 6 months duration, right?
Yeah. For the 6 months, you will not recognize the revenue. This $100. This $100 revenue. This $100 your SSP only are showing is here. But let me put it over there. What is the other item you put it over here? I'll put a one calculation. Then
Discount. I said discount. Let's say if there
okay,
is some
discount.
coupon discount.
Yeah.
But you can cover that
Yes.
later. First, you can cover this one. Yeah, sorry, I don't want to deviate.
Okay, so coupon discount actually will not come actually. Coupon, these are all the after the coupon discount values only, right? $200, and this is the one is here. Okay, so here what I can say that 2,200, yeah. So this is would be the 5% would be there, but anyway I can do the calculation again. Yes, this is the 5%, and this is the 5 into, yeah. So this is the way it will do the revenue, and
So you are saying, Venkat, for each item on the sales order, you have to have a SSP, right? There cannot be any items on the sales order which does not have SSP for RAR, is it?
can you come up with the question one more time?
So I'm saying for each item on the sales order, you are saying SSP has to be there for the RAR, in RAR, right? IFRS 15.
Yes.
What if
Yes,
there are
exactly. Yes.
some items on the sales order which does not have SSP, which does not require any SSP?
Okay. SSP, it doesn't need not to be on an order level itself. So the SSP determination, it can directly determine from the PRF plus in the RER itself. But you can send it from the source document from the sales order to, you can send the what is the SSP value here.
No,
If you
actually
don't
what
have
I
any
was,
item.
sorry to interrupt. What I was trying to ask, let's say if there is some feature, okay, or some functionality, additional functionality that we are doing, it's we are not charging, we are not selling it separately as such, okay. But what we are doing is like we are giving an option. If you choose if customer chooses that option will be added on the sales order. However, there is no price to that. So for those items, also SSP would be required, is it?
I think you are working on some project and you are specifically
No,
looking
no,
for
no,
that one.
no. I have couple of out of curiosity only, the way I said discount and warranty, right? So as I said,
Okay,
I
so I
don't
can I
have
can
background
answer
of
you.
RAR.
I think you're
Yeah.
getting
I can
into
answer you
detail
that.
about the functionality.
Yeah,
I mean, we can cover some of these things in the class itself, right? This is just an introduction, just to, if I mean, I'm not following your questions, and I don't understand some of these concepts anyway.
Yeah, say similarly, even I don't understand the SSP concept, so I'm just trying to get to the granular level. What's the need of the SSP
But that we
and
will be
POBs
covering in
and all?
our class,
Yeah.
right? I mean, we'll be covering what SSP means also. I mean, I think it would be more useful for us to know what is going to be our course content, what are the various, what's the time it will take, some of those questions, and then if you want to ask later on, then yeah, you can continue. I mean, I can drop them from the call. Because I'm more curious about when the class will start, and what will be the timings, what is going to be the course content, what is going to be covered, some of those things. We have only a limited time for this demo class. I don't want to miss that out.
No problem. No problem. I agree. Let's continue with that. I can ask my question separately. That's okay. If
Yeah.
people are not interested, I'm fine. No problem.
Okay, so on a higher level, so this is the way SAP RAR will do this one. Whatever it is there on the order level or the invoice one, so that is not actually the revenue it will going to get recognized. That's all because it's all changed from the IFRS 15 onwards. The recognition, how the value to be recognized, that has been changed. So to calculate that, how much value to be recognized over here, so then there is the SSP is going to play the values here. So that is what. So to determine to fix the value of the SSP, there are the more methods are there. So some people will go for the market research method. Some people will take it up for the last 1 year. How much is the rate actually they are selling it is one. Then they'll come up with some rate, like, so everything will come over here. This is all out of SAP RAR and more towards the business. So they decide and they give it high. And then how the SSP will be there. So there are the multiple methods are there within RAR itself. Some way we can maintain this here. So we can go that one here. Now the system can easily identify that, hey, what is the SSP is here, and the system will do the calculation. This calculation only for our explanation activities here. System will not see anywhere in the system. System will directly calculate it. These are the values would be there. So that is called as the allocated revenue. So this allocated revenue, there are the more of the methods would be there. If it is the phone, it is only the one time. The movement from the source system, when we do the goods issue, the respective fulfillment ROI will be generated. We will send to the RAR, and then immediately the whole revenue will be recognized in this particular month itself. Maybe the contract we might have created in the last month, we have not done anything. So then only it will come to the RAR, it POBs, and it will calculate all these things. It will be still same. In the next month, that means in the current month, we have goods issue the phone, then it will come and it will recognize this revenue. And this thing, it will be month on month, every month, it will recognize the revenue. It doesn't require to be any invoice, nothing is generated. It depends on. First one is the event based that we call, and this is the one we call it as a time based revenue. Because of this $695, it is spread over 3 years, it will be spread over, right? So this is the way, as per the new way, RAR will do. So SSP, yeah, that is what, there are the multiple more methods are there, market research method, or within the company, how over the long period of the 1 year time, for some customers, we might be selling at the X rate, and some customers we are selling at the Y rate. All these, some methods, some logic they do it, they'll come with some average price they will come at work at. That would be their standalone selling price for that product, it will be, right? For any kind of these things, it is required, it will do, and they do it is here. But as you said, I have seen the few of the products, They sell it as a bundle for the $1,700, but they won't call it as an SSP. And they saw that, hey, I want to split this 1,700 if these materials, if it is some percentage level, we have to do it in all these things. So then in that case, we have to come up with some different custom logic, and then we have to arrive this one is here. Right? So that complex one I can explain later, but but anyway, so this is the way system integrity is here. This is the way IFRS 15. So it's not only within the one order. So there might be the cases would be there. There are the multiple orders. It has been bought, it has been placed with the same customer within a short time. So according to the company process, some companies, they take this within the 6 months. If any new order from the same customer comes, they have to merge all these things into the treat as a one contract for the revenue purposes. That means one revenue accounting contract, and then all the POBs will be generated within the same contract, and the same. This is the way allocation will happen. That means, if suppose you think that this is the phone as initially placed in an order, this is the one other order, this is the one other order, all the three will go into the one revenue accounting contract, and the three POBs will be generated, and this will be the allocated amount for those against each POB. Okay. So POB to say line item, it need not be one-to-one match. Some cases we will not have an item in the sales order, we generate the POBs here in our RAR contract. Because of that service, in the order we are showing as a one service, but actually that is a two fulfillment. For each fulfillment, one POB is required. There is a performance obligation. How many obligations the vendor has, that many POBs has to be created from the revenue perspective. Right? So if you are good here, I'll just go through the course content is here. So course content is on high level. I'll go. I think Navin will share you that PDF. So all those things will be covered. So we'll talk about what is the integration point of view from the source system, what needs to be activated and everything. How the inbound processing is nothing but once we have created an order. So how the data will come into this RAR application. So that is what is the inbound this one. So first we have to maintain some activations. So which are all the orders, which are all the items which is actually relevant for RAR. So that is from the SD or BRIM that perspective. And the inbound processing is not there. Once this is activated is here. So which are all the items which will come is here, how it will come, how the activation within RAR, that is inbound processing. Then the contract management. These are all the concepts will come in here in the contract management. How to set up, how I can make it as a one time, or how to make it as a time-based events. And these are all will be based on some of the BRF rules we maintain is here. And contract management, it will cover all those things, BRF maintenance, POB attributes, and how the revenue accounts will be determined and everything. And then finally, when we post the revenues here, this is actually generated and it will go to the FI again, it will post it here. And not only from here, not only from the sales side, that means sales and distribution side. So if we have a BRIM system out there, how you make the integrate with RAR? RAR is the same, common, right? So, but its only thing is instead of the source system, instead of the sales and distribution system, we have a BRIM system over there. How you maintain that activation from the BRIM system? And then some is the different is here on the in the RAR side also only for the inbound. How those inbounds will be there. These are also on overall level. Yeah, it will be covered, not on the overall level. If you really would like to go through this one by one is here. Navin will share you all the course content and everything. So that's one, it will be good enough. Unless and then if you have any other questions. So
Yeah,
I
pause
for some time, some questions. Yeah, go ahead, please.
Yeah, you'll be covering RAR from SD integration point of view, I would guess, and also the BRIM point of view?
Yeah, good question. So SD point of view, definitely I'll cover. From the BRIM point of view, yes, I can cover it as, but I'm not sure that how far this system is available here.
I don't understand. You're saying you will cover?
I will cover SD point of view definitely. So the system what Naveen has given me, this is the SD system, S4HANA system. But in this one, BRIM is there or not, I'm not sure. If the BRIM is available, 1 second, let me. Yeah, I can show you from the BRIM perspective too. We have a BRIM here. Is it answers your question?
Yeah, because I'm working in BRIM, and one of the reasons for me to join the class is
Okay.
I want to learn RAR from BRIM point of view, right?
Yes.
Particularly creating these contracts, RAR contracts, and updating these contracts, and applying credits and so on. And the accounting side of things. This requires a BRF plus, right? Application.
We missed your last.
What I'm saying is, this requires BRF plus integration, right?
I didn't get you. What does that mean? Gallet plus?
BRF plus. So BRF plus is required, right, for setting up these RAR contracts and defining the performance obligation.
Yes, BRF plus is required in the two places over here. One is at the time of the RAR contract and POB creation, and second at the accounts determination.
Yeah. Okay.
Yeah.
How long is the class?
Yeah, maybe I'm just thinking of weekly 2 days on the weekends. That means for US is Friday and Saturday, maybe around 1.5 hours each session.
Got it.
Okay, you can expect something around 25 hours. Yep. Any other questions? Yes, I think if no one has any questions, we can wrap up. Naveen, are you available? Hello, Naveen. Questions is on the mute. Yeah, that's all from my side. If you have any questions in the one we are talking about the concept, anything over there, you can let me know. Otherwise, we can wrap up the call.
Yeah. Okay.
I'm good. Thank you, Venkat, for your time. Thank you.
Okay, thank you.
Thank you, Venkat.
Okay.
This conference will now be recorded.
Yeah. Later, and what exactly need to do, and what is the process and everything in the coming classes we do it. Today we'll try to achieve at least till from the SD side, the integration part. Okay. So from the first point of this one is here, if you see it is the figure. Suppose we have a two operational document. Here I am referring the operational document means it is from the SD side sales order. So someone I think is asked for the BRIM side too. So BRIM also is a kind of the order where exactly the links and everything would be there. In the coming classes we can clearly understand, and when we talked about the BRIM, you clearly understand which is the document and everything. So first we are talking about the sales specific one only. If you got any confusion, so you can raise your hand and you can let me know. I can stop it and I can ask you, clear your doubt. Okay, going ahead. So in the SD side, how it will happen over there in the earlier time revenue recognition is that suppose we have a sales order, and sales order we have a two line items are there. In the two line item, suppose the first line item value is $100 and second line item value is $200. How the revenue will be recognized? Again, the first line item, the revenue whole $100 will be recognized. Second line item, the whole $200 will be recognized. And if we have a different order is there, in a different order also, it will go ahead and it will do the revenue recognition. But when it comes to RAR, that is not, the first thing will not happen. Within the same order, whatever the transactional price, we sell it to the customer, that's not the revenue amount. Revenue amount has to be recalculated based on the certain rules. So that's the first point is here. So any doubt on this one? Any clarification would you like to have?
Venkat, can you start with the, what exactly RAR means? What is the comparison between the normal process? Then we can proceed further.
Can you elaborate more on that point of view? I thought that I have started there, but I would like to get it. What exactly you would like to have?
So, in a simple terms, RAR is a specific requirement of a company. Not every company goes for RAR. So,
Venkat, are you sharing the screen, Venkat?
Oh, okay. Yeah, that's a one good point. So let me share my screen. Yes, I hope you can see my screen, right?
Right. I can now I can see.
Okay. Yes. Yeah. So now you go ahead. You are saying that it's not every company's requirement for RAR.
Yes.
Okay. No, it is not. So in the previous version, even though we don't have the RAR, so maybe the companies, because we have done from the sales perspective, majority of the things is physical hardware goods or something, we do the sales. That time, how we recognize the revenue is here. Once we have done this, suppose you take this is the operational document is like a sales order, and we have the two items are there. So for the both items, some value is there. So that value, we do the revenue account determination. How the revenue account determination will do. So for the line item, condition type wise, so we have a different accounts are there. Don't go into the deep. So if suppose we have the only one net value is there, and that is calculating, so that we have a revenue account. So that we are posting the revenue, we are posting the value to that particular revenue account at the time of the invoice creation, correct? When we have created the invoice and when we post to the FICA document, when you post to the FI document, so revenue account will go and post it to that one. That's correct. That's the revenue.
Okay. And is there any significance with respect to the dates? How in a normal process, whatever is the billing date we consider, on that very date, my document gets posted.
Yes, correct. So in that date only, you are posting the revenue in that particular month, correct?
Right. So now coming back to RAR, what is the requirement of the company and how things are moving ahead in this?
Okay, right, correct. So at least I can take it up from the 2017 or 2018, the accounting guidelines has been changed. So how you are supposed to recognize the revenue, that has been changed. And the previous one, That's what I'm previous one. So some companies actually they have their own custom developments. I have seen it. Basically, some technology companies. I can say okay, some technology companies I can say that some kind of the different way they are recognizing the revenue. But majority of the other companies, whatever the value we are sending it is to the customer, so that is the amount it is recognizing the revenue at the time of the billing. Suppose the item one value is $1,000, we bill it to the customer as on today some $600. That $600 is posting into the revenue account. That is the revenue the companies will show in that particular month, in particular period of the billing period. Correct? Will you agree for that one?
Yes.
Okay. But that's what I'm saying over there. It is not the revenue now in IFRS 15. And in the IFRS 15, so the revenue, the calculation, the process, the rules has been changed. So you are not supposed to show that one, the revenue, or I can say that the revenue of the first line item may not be the exactly what is the value you have billed, or otherwise what is the value you are selling to the customer. That is not the amount you have to show as a revenue. For you, given an example, the same thing is like you are selling in the item 1 and item 2. Item 1 is the demanding item. Item 1 is not the demanding item. Item 1 is a demanding item. Item 2 is not a demanding item. So then you are giving a more discount on item 2. So item 1 you are selling for $1,000. Item 2 you are selling for the $100 only. But ideally,
what is the demanding item?
Sorry?
What is demanding item? You said item 1 is demanding item.
I just given an example is here. So when the companies they're making it as a bundle and selling it to you, that's the one I'm just talking about here. So just that time, so they have offered more discount on item 2. So that doesn't mean that whatever after the discounts and everything, suppose this item has come as item 2 has come as $100 and item 1 has come as $1,000. Total as a bundle you are selling it as $1,100. So, but the revenue has to be calculated in a different way in IFRS 15 guidelines. It is not the item 1 the revenue is $1,000 and item 2 revenue is not $100. So they have to come with the different rules, different way, the different amount should come. So that we will discuss in the next few minutes. So first, just understand is here how in SAP SD wise we are doing it. So whatever the net value is here, that is the value you are taking it as a revenue. For the item 1 is $1,000, $1,000 is the revenue. If it is item 1 is a goods issue based, the moment you have done invoice, you are recognizing that value as a revenue because you are billing it to $1,000, you are posting it to the revenue account. That itself, that particular month itself, you are showing that $1,000 is the revenue. Item 2 is $100, $100 is the revenue. Till that point is clear?
Yeah.
Okay. May I know your name, please?
Yeah, I'm Shashi.
Shashi, yeah. Okay, I'll go Shashi one by one. Sir. The next flavor, if you see that, if suppose you have a contract, the contract is for the 5 years of the service you are supposed to provide. So that is the word, suppose item 1 is showing, representing it here. So the customer is paying the whole amount at the beginning of the contract itself. That means the 5 years contract value is paying on the first month itself. So how much you are billing? You are billing a whole $1,000 on billing on the first day itself. So how we show the revenue? We are showing the revenue in the first month itself. But he still has to deliver the service for the remaining 4 years, 9 months. 4 years, 11 months he is supposed to do it, correct? So if he shows the whole amount, whole billing amount as the revenue in the first month, this month itself, this month or this quarter or this year, we can say that he is showing the more revenue. But really the business is for the staggering period of the 5 years. So to address all these kind of issues, the new guidelines has come into the picture. Now in RAR, how it has been addressed, we will see. right? So that's the reason I mentioned the point is here. Whatever the billing value you are doing it here, or whatever the net value for this one, that is not the revenue one this year. That is the first point we are addressing here. And the second point is not only the items within the order, so it is actually considered for the multiple orders together. So for that multiple orders together, we don't have that functionality in SD-based revenue recognition, correct? So because of SD-based revenue recognition, either based on the with the invoice reference or with the order reference, both the things, it will just create a revenue accounting controlling lines and accounting lines it will create, and then it will post it. That is also will come into the other than the blank method. Standard method from the revenue, I'll just go and show it is here. You can see it here, how we do it here. If you maintain the revenue recognition is a blank here, the moment we do the invoice, so whatever the invoiced amount, that amount based on the revenue account, based on the revenue account determination in ESD, so it will directly post it there. If you take it as a B, that means this is the time related one we have. If you take it as and when we do the billing document, the billing document you can take it as like that is generated from the bill plan. So in the sales order level, you have a bill plan. Suppose if you take it as a yearly billing, the first year billing from January 1st, 2022 to December 31st, 2022, that is the first year. Second year, 2023, and the third year, 2024. Okay, I took a wrong example. It is in the billing plan, and right now it is in the 2024. From the start of the year to the end of the year, 2024 and 2024, 2025, and 2026 is there. So when you do the first year billing, so one amount will be generated. So that amount is for the entire year. So when you select SD, the moment it has been billed, if the first year it has been billed, so the amount is there, that amount will be segregated into the 12 periods. So for each period, that amount will be recognized. For A, with refers to the order. It doesn't require the billing. So from the order itself, the system will take it up. Okay? That is only the difference is here. So when we go back to here, contract example, that is the one we have taken it up here. Okay. So it only works with the
what you showed in the SAP is the old one, right? Old revenue recognition.
Yeah. Yes, this is the old one. If you see that, this is already grayed out. Otherwise, in the older other version, we should have a option to select this here. This is the old one. So most of the project we have worked, we have not selected any of the options here. This is the blank. That's the reason. Whatever the amount is invoiced, that amount will be recognized, will be posted into the revenue accounts. It will directly go and become as a revenue. Right? Very few projects have worked with the different options here. So that is one of the different options. I told you B and D, sorry, A and D. These are the two options I told you. Right? Okay.
But going forward, that is going to be grayed out. You are not going to do anything there anymore.
Okay, you are not going to be used anymore. Now RAR is becoming a part of the S4HANA. You will not have any SD-based revenue recognition. So
right.
you are all the companies are forced to use RAR. There is no more SD-based revenue recognition. Just only for the clarity purpose, I'm just giving you how SD is there and what is the difference between the RAR. Okay. Okay. So it is not okay. Yeah, it is based on the item. Yeah, let me finish this one, then you can ask the question. 1 second.
Okay.
Yeah. Yeah. So whatever it is not, whatever the item it is doing, whatever the item value, that is the revenue in SD, but not in a RAR. So it will calculate it differently. I'll explain you that one. And it is not only the one sales order itself, the same thing, the RAR, if it is required, it will take multiple orders together into the considered, and it will recalculate the revenue as here. That is the first one. Yeah, go ahead. You can ask your question.
My next query is that many companies says that when they receive the goods, then only you can generate the bill. Is it also the part of RAR rule that whenever they are receiving, see when we are sending the goods, we are generating the bill on that very day. But they say for the customer, when they are receiving the goods, they want that bill has to be posted in accounting. So this is RAR case, or it's a normal thing?
Can you repeat your question?
I said, sorry, I said whenever customer company is raising a bill, they are delivering goods on the basis, the billing date is generated on the basis of PGI date, service render date. Okay. Whenever bill is generated, accounting document is also posted. Okay. But the customer says that when they receive the goods, then only you can generate the bill. Okay, that accounting has to be generated. Is it the case of RAR?
Okay, we are not changing anything is how the delivery, how the billing is done. So we are not changing anything related to that part.
Okay.
RAR will come later to that part. So as on today, how you are generating the billing document, once you do the delivery, once you do the PGI, so then that delivery is, that delivery document is relevant for the billing. You do generate the billing. Once you generate the billing, then only you will post to the FI. That is all for internal, whatever it is, the current day process is the same process even in RAR too. There is no change at all.
Okay, I can explain a little bit. So basically, okay, you have to differentiate between a few things. Okay, now one is the customer will receive the goods. Okay, may even be invoiced. Okay, but the accounting side of that invoice may not be the accurate one if you're looking at RAR point of view. Okay, because you may say that I have given this bundle product, the cost of the bundle is $1,000, and the customer paid for $1,000. Even if the accounting has happened for $1,000, RAR will create adjustment entries so that the actual revenue that is recognized by the company will be less than 1,000 because it has to be apportioned over the period of time. So even if in the old SD, you don't have this concept. So you will do the delivery, you'll do the billing, the accounting entry will get created, and everything is done. But here now in RAR, even if the invoicing has happened, accounting entry has done, there will be the concept of deferred revenue. That accounting entry will be generated using RAR. So even if you create so there will be adjustment entries done so that even if the revenue has been posted, some of that revenue will be taken out from there and it will be put into deferred revenue. This deferred revenue posting is what RAR is doing.
It's like in the first stage, it will be generated as an accrual kind of thing, and in actual will be generated with respect to RAR.
So normally you have a sales revenue posting, right? But you will not recognize the full thing. You will make an adjustment. So you will say some of it will go into deferred revenue, and only so much will be done here. That whole calculation and everything will be done by the RAR engine. RAR engine will identify and then make those postings.
Those are all little advanced topics. What's your understanding? No, what's your understanding? I think somewhere you are missing the link is here.
Still, I'm not sorry for that. Still, I'm not able to bifurcate with the difference. The what kind of difference is there with the standard and with the RAR? That's why these questions
I
are
have
coming.
not told
Sorry
you.
for that.
Okay, I have not come out and I have not told you anything is here. So somewhere you are thinking about that. First,
No
what I
problem.
am saying is that try
Okay.
to
Okay.
understand that one, and then you ask the
Yeah.
questions
Okay.
after that.
Okay. Okay.
Okay.
Okay.
So
Fair enough.
no. Try to understand this here, because the deferral revenue and unbilled receivable concept is also there in with the itself also.
Okay.
It doesn't
Okay.
mean that it is not there. It is there only. First, high level, you
Okay.
just try to understand. This is only the first day, right? On the
Okay.
first day, what
Okay.
I'm saying is here. Okay, when you create the billing document, we have not changed any logistics process. Logistics process means sales order and delivery and invoice creation and the posting to the accounting document. There is nothing will be changed. The process is existing only. This RAR will come as a additional one. It will come out here. So we talked about how this RAR will be useful, how the revenue will be calculated, how the revenue will be posted. Those things we have not changed anything. That's what the other guy. Okay, I don't know your name. Sorry for that. So he mentioned that one is here. Okay. So only thing is I'm conveying is here. So the first one simple case I have taken it up. If you have invoiced $100, you are recognizing the revenue $100 only. So you are not recognizing. We don't have any other mechanism. Either it is the $90 or it is the $110. Right? That is the first point. That also I told that if the total your sales order value is $100 and the $200, if I take the respectively for the line item 1 and line item 2. So for the line item 1, you are recognizing for the $100. Line item 2, you are recognizing for the $200. So that is before IFRS 15, or we can say that within ESD. But when it comes to RAR, that is not the case. The total revenue would be the $300 only for the item 1 and item 2 together. But it can be item 1 is $150 and item 2 can be $150. Both together, it should be equal to the total revenue of this document. If I take it as a 1-to-1 is here. So don't go it is here. So there is a little more complex is here. But I'm taking it as a one sales order and taking an example and just doing the revenue is here. Right? This is sales order revenue is $300 and item 1 value is $100 and item 2 value is $200. But in RAR2, we do recognize the revenue for the $300, but with respect to the item 1 is 150 and item 2 also 150. Total 300 is matching, but item level it will not match. So that will explain later. First, only the difference I mentioned here. That is the first one. Second one is it need not to be only the within the items to consider to calculate the reallocate the revenue within RAR. It can consider different sales order to further. That is the word here the example has been shown is here. 2 sales orders is here, 1 and 2, and each one has the 2 line items are there. Here 1 and 2, 1 and 2. These are all will considered as the 1, and then it will do the reallocate the revenue. The total of 1 and 2, the net value would be equal to the total of POB 1, 2, 3, 4. The revenue would be here, but it may or may not be the same as the corresponding net items value is here. So do you understand that one too?
Yes, Venkat.
Yeah, correct. Okay, so that is the first difference, is right? I told you. So how RAR step by step will do it? This is all overview concept was I'm going here. Don't take it otherwise. Only try to understand this here, then we can see it here. So in the step 1 is here, the one I have explained is here. So this is the what the system will do is here. It's identify the contract with the customer. So then that means the identification of the contract is, this is the way it's here. Here, in this case, it has taken the order 1 and order 2 both together to calculate this one. So this is the what which is identifying the operational document into the one contract. So one how RAR structure also would be there here. Like we have a sales order, and within the sales order we have items is here. Here we have a revenue accounting contract. Within the revenue accounting contract, we have a POBs here. So the POBs we'll discuss this here now. So this is the way structure is here. So now, what are all the documents? It has to be combined into the one contract is here. So that is the what here he mentioned. The first step is here, identify the contract. It is all with respect to the revenue only. So contract level is here. So next, it will identify the separate performance obligation within the contract. So what is the performance obligation is here is miss, which are all the, we can say that services, it has to be, sorry, I forgot it, sir. As an individually, the deliverable, and the customer can use that one. So this is all we can say that technically how the revenue have been recognized this year. So that's the way the POBs will be identified here. So in this example, if you see that, so each item is representing the one POB here. So delivering of the hardware are there, smartphone is there, smartphone 1, smartphone 2, smartphone, suppose this is the one, if you take the phone, and this is the charger is there. The phone, you can use it on your own. So that's the one you mention as the one POB. One, individually, it can be, it is like a delivery. From the company's point of view and from the customer point of view, he also can utilize the services. And if I take this is the charger also you can use it for as an individual. Without phone also you can use it, like that, right? So that's the reason it has been created as he has shown as the here is that each POB is representing the one item, one-to-one is here. In some cases, item 1 is there, only one item is there in the operation document. It can create as a 2 POBs are here. And in which case it will be there, I can give one example. We have a phone, and that phone will have some warranties here. Okay, phone value is $1,000. Because we have a warranty for the 2 years, our company has told that no, 10% of the phone value we should keep it for the warranty, because that is a different service. Warranty we are giving for an additional 1 year we are giving this here. So we have to keep some revenue for that one recognition. In that case, only for the one item there in the sales order. In the sales order side, we are not showing as a differently. Only phone one item is there. It was showing as $1,000, but the revenue, it has to be keep some amount for the warranty. So only 900 is for the cost of the phone, or $100 will keep it as for the warranty. So in that case, we'll have a 2 POBs would be there. One first POB, the value is $900. Second POB, the value would be the $100. So that is actually we are taking this $1,000 and we are the defragment to $900 and $100 for the POB1, POB2. So those are all the cases also will happen is here. In some cases, in the order level, we show as different items we show here. So, but we don't want to recognize the revenue or revenue recognition. So then these two can be combined into the one POB also can happen over here. That is the what is showing here. So we'll see a few of the cases here. So that is the one he's showing the identify the performance obligation is here. Then it will come to the determine transactional price. What is the transactional price? From the source document is coming over here. It is here. So the one example right now, earlier I told you, this is the value of the $100 and this is the value of the $200. Net value is here. So when it comes to the POB, I told you that it is a 150 and 150. So here in the fourth step, it will allocate the transactional price to the separate performance obligations in the contract. Right? This is the one itself. So in this step, this RAR engine will work together and based on some rules and everything, it will do this here. We will see the rules. It's not a very complex rules and everything. Don't worry about it. So it's only thing is instead of the taking the same 100 and 200, so it is recalculating and it is assigning you the 150 and 150. Those are the becomes of the revenue. Those things over here. In the fifth step, whatever the revenue is there, So based on the recognition, some are based on the time based, some are event based. Whenever the revenue has to be recognized, that time it will recognize the revenue and it will be posted. Okay, so that is what is over there. Whenever the performance obligation is satisfied, that means if you have a phone, when the POB is satisfied means the moment we deliver it to the customer, that time it is satisfied. If it is a contract, some service we are giving over here, it's a continuous process. Over the time, that is the time-based POB, that time, that is only the revenue, that is the POB satisfaction, right? So for the whole 5 years would be there. And some cases, very complex cases, I have not seen such cases are here. Even though you have delivered a phone, or otherwise you have delivered some equipment to the customer, very specific, some products are there. Unless until you activate or otherwise you install something, that product cannot be used by the customer. So that means even though you have delivered, it is not, performance of POB is not satisfied to recognize the revenue. Once you activate, then only it will be there. Correct? So that's the one is the difference between this one is here. So those is all depends on that one over here. When to recognize the revenue? At the time of the POB is satisfied. POB satisfaction is company has provided the service to them. Or we can say that when the customer can use that product. Okay? So that's one is here. So these are the 5 steps is here. So just, are you good about these 5 steps is here? But this is only theoretical. It will not be useful when you do it here. But the only thing is, first RAR contract could be there. Within the contract, you have a POB should be here. All the POBs will have some transactional price, and using this transactional price is nothing but how the POB is created, the respective from the source document, what is the value is there. That is the value only. It will have a transactional price, and that transactional price among all the POBs within RAR contract will be reallocated for the revenue. Or we can say that the total of the transactional price of the POBs is used to calculate the revenue of all the POBs is here. So that is the 4th step is doing it is here. And the 5th step is when to recognize the revenue. And once it is POB satisfied, the system will recognize the revenue and post it is here. So if I just put it in a one Excel sheet is here. Okay. Suppose I have a one-to-one as a simple order and simple scenario I'm taking up. Don't go to the too much this one. So if you have something over here, so you can ask me. But I'll okay. Okay. So here items 1, 2, 3 are here. So item 1 order level. Okay. I will make it this one here. How can I make it as a center? Data? No. Yeah. Sales order. Oh, okay. So you take this is the net value. Okay. Here I'll okay. Okay. So here I'll mention as item net value. Okay. Yeah. POB, transaction price, allocated revenue. Okay. Okay. So item 1 value is 100. Item 2 is 200. Item 3 is 300. Okay. This is the way I have taken it up. And where is the dollar symbol is here. So I think I need to make it bigger. So I'm putting is the total is here. Right. So just have given as a RAR contract number, only one number, right? So in this RAR contract and POB numbers 1, 2, 3. So I have taken as a simple case, whatever the POB number is here, the same POB number it is not. If we have an additional POB is there. So if I take it as additional POB, so there will not be any item is here. So here the POB 4 will come and here would be there. So the transactional price for this one would be the 0. And what is the transactional price is here? So in this case, the transactional price would be the same is here. Okay. What is the total value is here? The same one is here. Sum of all these things is the same thing. This also I'll convert into the dollar format. Yeah. Okay. Okay, this is the transaction price. So here, when I go to is here, so this is what I want. First, it will identify the contract because of we have taken as a simple scenario. It will identify the only the one contract is here, and then it is identifies the POBs are here. How many POBs are here in this case? 4 POBs. And our line, our order level, we have how many items are there? Only 3 items are there. And but here, the POBs wise, the company needs to be delivered is 4 services are there. So the 4 services are there. So actually the 4th service in the order level, it is merged is here. So total is this one. Total transactional price is here. This is the what in the step 3. Total transaction price is 600. And in the step 4, it will do based on some rules. Now here the system will calculate the revenue part is here. So that is the what we whatever the revenue is calculated here within our RAR. So that we call it as the allocated revenue here. This allocated revenue, I take it as this is the one. I'm just as a random figure I'm entering is here. System will calculate it based on the rules. It will calculate something else. Yeah. So this is the one 175, and this can be the okay. Instead of this, I'll put it as 200, and this is 100. And how much is the remaining? 450, 150. Right. So how much is the total value is here? The total value of the transactional price is always equal to the allocated revenue is here, even in this case also. Okay. Okay. So that is what we are doing the step 4 here. In the step 5, the system will recognize based on the some settings or something is finally over here. So if I take it as this is the event based. So the moment we have done the PGI, this revenue will be recognized in this particular month. So the event I mentioned as a GI, and this one also I can say that event, but invoice I'll say that. The moment I do the invoice, I can say that I've just given as a 2 different events I have given over here. Just to introduce this one here, you can say that generally people will say that goods issue time, but the system you can say this based on the invoice too. So it's the only thing is whenever this event is happened, whether the goods issue or the invoice, there are the more events also there. That time the revenue will be recognized of 150 and 200. Suppose this is the time based. Then every month based on the time period, $100 is the total amount. If it is 1 year, 100 by 12. If it is 2 years, 100 by 24. That is every month it will recognize. If I have taken a whole month, if you start from the mid of the month, based on the day-based calculation, it will do, and it will do it scale, right? So it doesn't depend on any other thing, whether we have done the invoice or not. If suppose if you don't have this one, this is also IFRS. So it doesn't depend on whether we have done the invoice to the customer. No, the moment you have done the goods issue, it will do. And when it comes to time base, it will not check anything whether you have done any invoice or thing. No. So only from the start date, immediately to the trigger, it will start recognizing the revenue for this one. So how much the amount will revenue? These are the amounts will be recognized for each POV on our cap. But how much we are charging the customer for this item? $100. We do the invoice for the customer is $100, but we recognize the revenue $150 after the moment we are done for the goods issue. That is the what here it is saying is here. The performance obligation is satisfied. This performance obligation will be satisfied at the time of the goods issue, and the system calculated revenue is 150. That is the amount it will recognize the revenue, right? So you clear or this one or had you?
Yeah. Revenue recognition methods, you have event-based, time-based. You have any other basis or percentage of completion?
Yeah, okay, these are the two things only. It will go on. Yeah, we will. There are the little more variations are there. We can introduce later. So, but only the higher level is 2 levels only: event-based and time-based. Yep, Shashi, are you clear with this concept? Because of we always revolve around this concept only, but system-wise, object-wise, how we do, so that only will vary.
Yes.
Okay, good. Okay, so then.
So when just to conclude in this example, till column Z, my transaction price 100, 200, 300, and some is 600. Okay, and when I'm further moving and this allocation, it's not line item dependent. It's the amount on the basis of how much amount has to be bifurcated. But some will remain 600. For you said $150 will be on event base. It can be GI. Next $200 will be also on the event based GI. 100 can be time based. So this allocated is not representing the line item.
Yeah, correct. So okay, you consider this one. This is from your operational document of the sales order. So the total sales order value is 600. So that 600 is coming is here, and then you are reallocating that 600 into the different roles, different amounts.
Okay.
So this amount only is coming is here, and this amount is actually is being reallocated is here. So that is what we are calculating. That is what we are calling as a allocated revenue. Always operational document value, whatever is there, that much revenue only will be recognized. But item level, if you come here, one item, if it has a one POB, that POB, one item is one POB, so it will not be, it may or may not be equal to the value of the item. We recognize a different value. Okay? Yeah. So that is what, these are the 5-step rules. We say it right. So 5-step rule for the IFRS. So how within the system it will do it is here. So here one example out there. Instead of the one order, if you have 2 orders are there. So here I can enter the 4 also, and 4 is really as a $0 value. So these 2 belongs to order 1, and this is order 2, order 2. So in this case, we are actually combining the 2 orders. That is also will happen like this one. So the allocation, it will take the within RAR, how many POBs are there, RAR contract, how many POBs are there, the total value of the transaction price it will take, and it will do the reallocation. That means the reallocation will happen for the POBs within RAR contract it will do. Right? That's the right plan. So that's what is another example here shown is there. And yeah, this is a little more advanced over here. So I just have told you, right? This here warranty. Instead of the warranty, here is shown as a update, right? So software update something. So even for the software update too, if you would like to reserve some revenue is here. So in this case, he has created the one more POB only for the smart. Okay, smart pack is a bundle on the order level is here. It has the two line items are there, smartphone and battery charger. For the battery charger, we don't need any revenue. Something needs to be happened, but we would like to have the revenue for the update, right, for the phone. So that's the reason he has created the first POB and second POB, something that's shown here. This is all little very conceptual is here, so we can see in the system how it will work and everything. But as a conceptual, it need not be one-to-one combination. That means one item in the sales order, one item in the POB. No. So one item in the sales order can have the many POBs, or multiple items in the sales order can have only the one POB. So POB is a point of view for the revenue recognition purpose. But if we have multiple items there on the order level, and if you have one item on the POB, how do you make sure that whether the POB is satisfied? So those are all is a little more complex one. Don't go that much level here. So simple one. That's the way. Just understand this here. And here it has shown is here one more example is here. So we have a mobile phone and we have a service contract for the 24 months. And the order level, so this is the what contractual price we have mentioned over here, right? So contractual price is actually the price at the sales order level. So that will be carried forward is here. That is the what one more time as the contractual price or the transactional price is here. So that is the what we have talked about this transactional price. That is only the contractual price we talked about. So mobile phone on the order level, sales order level, we are showing as $20. Service contract value for the 24 months, we are saying it as a $480. We are saying both together. If the customer buys a 24 months contract, and then we are giving a mobile phone for the $20 only, right? So then that is the what is the $500 we are showing here. And next we are introducing the one term called as a SSP. So what is SSP is here? If you sell a mobile phone individually, or companies will have different methods would be there. That is all for the business purposes. So they come to the one price. If they sell the mobile phone, the value is $360. If they sell only the service, the value is $240 for the 24 months. That's the way it has come over here. Okay. So where do we maintain? How do we maintain? We will see in the future classes. But right now, just only take into the concept over here. The company has based on the different methods that is out of our SAP system. So they based on the different methods and everything, they have arrived. If they sell the mobile phone individually, so the value is $360. For the service means for the mobile they are giving a service. That service value for the 2 years, the value is $240. So if they sell individually, the value is $600. So, but if you see that they have given us some $500 discount, $100 discount, and totally they are selling it for the $50 only. Yeah, these two together. So when it comes to RAR, it will do the calculation is here. Out of the $600, what is the weightage of the first SSP? 60%. Out of the $600, what is the weight for the second item? $40. That means that $360 is 60% of 600. $240 is the 40% of the 600. So those are the percentages that have come here. That is one of them. So then, what is our transactional price? Our contractual price? $500. So 60% of the $500 is the $300. 40% of the $500 is the $200. That is the allocated revenue as well, right? So how the system will calculate the percentage, or otherwise the rule to calculate the allocated revenue is, this is the rule is. How do you maintain the system? We will come later and then we will go there. Okay. So system will have a standalone selling prices, or otherwise we can say that our company, whoever is doing out of business, so they have a different method. So they will have a, based on their own method, they will come to know that how much is the standalone selling price for each product. So out of the total value, so they calculated the SSP percentage weighted method, and that method, that is the percentage to distribute the contract values. So even if I say it our example too, so we have these are the net values, total contract value is $600, and if we add it is here, insert, if you have a SSP and the SSP percentage will add is here, and suppose my enter is 200, 300, 400, 500, like so. So then sum of all these things, right? Insert, equal to this. Okay, 0.1 first, 14%. Okay. Okay, so now which one has to make it? All right, if you make it as a total, this would be the 100%, right? So 200 is 14% of 1400. 300 is 21% of 1400. So like that, this is the SSP. And then this is what you call allocation percentage. So then if this value, my God, this value is equal to this one multiplied by my contractual value is 600. That's the one. Okay. Right. This is, I will just change it here for the calculation. Right. Okay. My contractual value of the 600 is distributed like this. The percentage of distribution is like this. The way of calculation of this percentage based on this is the one. This is the way it will work here. We'll see in the system and we'll see the more scenarios are here. How do we send from the sales order? How we activate is here? How it will take inside here? Where do we mention SSPs and everything? This is the basic system calculation is here. There are the many other things over there. And then how do we see that how the system will come to know that whether this is the event based or this is the time based and all these things we see later. But if you remove all these things, conceptually the system will work like this. This is the standard RAR behavior. The calculation of RAR engine, basic level, it will calculate this revenue based on this percentages. We all place with this and some other things too. At least this part is clear.
Yes, Venkat.
Okay. Shashi, other guy, I think.
Yeah. This
because
this is fine. This part is fine. Yeah.
Okay. Great. Okay. So now we will see that how do we activate from SD point of view here. So it's a simple. Go to SPRO. Sales and distribution. Yes, sales and distribution. Here you see that revenue accounting and reporting. So in the revenue accounting and reporting, so this is the one. It doesn't require anything is needs to be done, whether you maintain as a none or something else here. This is the one thing is to give you anything is only this is the first only we have to check it over here. And the destination we don't need anything is here because now in S4HANA system, within S4HANA only RAR is available. Earlier, in the earlier versions, so it is a different server altogether. So RAR system itself is a different server. So that time only that function module, RFC function module is required. That is actually used to integrate both operational system and the RAR system. Operational system or operational document, whenever I mention, it is always refers to our logistics is here. What is our logistics is here? Sales order, delivery, invoice. These are all the documents. Anything is here. Okay. Right. Second thing is here, activate functions to integrate is here. So when we see it here, okay, based on the same, this is the little older system is here. So we just activate based on the sales organization only. So these are all the dates will not be there. So I think next time I'll ask Naveen to give you a new system. That's what he mentioned is here. These are all will not be there here. Only the thing is, so we activate for the sales organization, or whether for the sales organization wise, whether it is activated or not. Okay. Here, if you see that maintain revenue accounting, this is the one thing is important here. So here, if you see them, sales organization, sales document, and item category. These are all these combination. We say that whether it is relevant for the revenue accounting or not. If you maintain X, then only if the item values will go to the RAR, then revenue accounting contracts, POB calculation, and everything will be done. Otherwise, nothing will happen. So it will not go to the RAR, or we can say that it will not be, data will not be sent to the RAR. There is no integration to the RAR. Okay. Even if you take a case like so, suppose we are whatever we are billing to the customer, we are recognizing that amount itself is only the revenue. So then you need not to send it to RAR, correct? Yes or no? What is the advantage of the RAR is here? So if we have anything is something is different, so we need to calculate the different revenue than we are billing to the customer, then only we need it here. Even other than the time based too, right? The moment we do the invoice, and that is the amount, we are recognizing the revenue, and we don't have any time gap between the goods issue and the revenue also, goods issue and the billing. So then we can simply, take it to the same bill it and revenue account determination, determine the revenue account, and that itself is the revenue. So if we have those things are there, we know no need to send it to the IR. Okay. So here we are keeping the relevancy is here. That relevancy flag is with the combination of sales organization, sales document type, and item category level combination we maintain whether it's relevant for RAR or not. Okay. So we discussed about the other option too. We definitely discussed about M. We discussed about G and these things also. So first, slowly we'll go here. One by one, we add the layers here. Definitely. But integration will happen here. Whether the operation document is relevant for RAR or not. So this is the why we do it. If you mention as not relevant, or if you are not maintaining anything is here, with this combination, if my order has a different item category, no, it will not go to RAR. Okay, this is the second setting. Okay, so we will not do much thing is here. This is the only thing is we do it is here. Okay, so basically first level we mention as X, this system is for the RAR. And the second thing is we mentioned sales organization, sales document type, and item category level, whether that is relevant for RAR or not, we mention this here. And these are all we come later is here. This is all we say that suppose we have any scenario without sales order, we have directly the billing document, how to integrate to the RAR. So here what we have done is based on the sales document item category is there, right? So this is the first part we have talked about, right? So order level we have come here and then we come here when we do the goods issue. Then this is if we suppose this is the event based. If the event based, when the event would be there, goods issue, right? We have mentioned this here. So that means that before the goods issue, we have all the RAR, contract, POB, everything would have been calculated here. But here we are talking about billing relevancies here. This is the one, sorry. This is the one, billing relevancies. Okay, billing item level we have not covered that. These cases will happen. We don't have any order here. So directly billing document is coming to the picture. So that time also if it is required, how it has been, that's one. Okay, so we'll talk about later all this thing. This is the complex. So this is the from the activation point of view also. These are things are there, right? So just one more thing is also I'd like to answer. So when we create an order, the process point of view from the RAR also. When we create a sales order, whichever all the items is relevant for RAR, the data will be transferred to RAR, and then POB contract and POBs will be created with all these things, with the based on the SSP, the allocation percentage and everything. The revenue also automatically will be calculated. So this is the what till this point will happen. The moment order has been created, it is sent it to the RAR, and this is the step will happen. Okay. If first item, the revenue recognition type is event, goods issue. So then when we do the goods issue, even that time also the system will send the information to the RAR. Okay. So the RAR will receive it. Oh, this is the goods issue happened, and for this POB, the revenue has to be reckoned for the goods issue. Then system will recognize the revenue. And if it is a time based, automatically will do it. So that means the goods issue time also we are sending the information to the RAR. And then the third one is invoices here. So some cases even the event type can be mentioned as invoice too, but that will come later over here. So we can understand over here. So the invoice main purpose is here. Once we have done, suppose this item, we have done the invoice for the $100 here. So that means the invoice amount also will send it to the RAR. So for this item, the item is referred to the system is wise enough when because of it only has created the POBs, it can identify that what is the POB. So for this POB, the invoice is done. So once it is done, the system will update that information also to the invoiced amount. So the invoiced amount, the usage is to calculate the deferred revenue or the unbilled receivables. So there is a one small additional difference also is there. So we'll talk about in the next feature. This one is here. So as the other guy is mentioned, so sorry, I didn't get your name instead of mentioning as the other guy, other than Shashi. And what is your name, please?
Prashant.
Prashant, yeah. As Prashant is mentioned, so we have a concept of the deferred revenue and unbilled receivable. So okay. Unbilled receivable. So these are the two concepts are here, right? So in RAR, we'll have a different terminology and with a little different changes are there. First, let me talk about the unbilled receivables and deferred revenue. And we have a flexibility in RAR. Either you can use this one or the new one is there. The new one is contract liability and contract assets. We'll talk about the difference between these two, and this is first. Let me talk about this. Concept-wise, both are the same with little differences. Okay. When the deferred revenue, what is the deferred revenue is here? Suppose in this case, $100 is the net value, and in this case, $200. And yeah, we'll take this is also okay, whatever it may be, even based on your okay. Okay, in the first case, our contractual price is $100 and allocated revenue is $85. We have done the goods issue, and then we have recognized the revenue. How much is the revenue is recognized? $85. And how much we invoice to the customer? $100. The invoiced amount is more than the recognized revenue. So then that time system will generate the unbilled receivables. Unbilled receivables is the difference between these two. Okay. When, oh, sorry, this is the one is the deferred revenue. It's my bad. When the invoiced amount is more than the recognized amount, that time the system will calculate the deferred revenue. The deferred revenue is 14.29. So that is the difference between these two. When the invoiced amount is less than the recognized revenue, in that case, the system will calculate the deferred revenue. In this case, the deferred revenue will be calculated only, this is the case only. Because if I would like to change this calculation, right? So here see that I have done the invoice. I'm considering this case. I have done the invoices here. I have done the invoice for the $200 only. Invoice means I'm using a synonym terms, billing document and invoice. Okay. I have done the billing document $200, but my revenue is $270. My recognized revenue is $270. My invoice amount is $200. My recognized revenue is more. So then this is the case is unbilled receivables. The unbilled receivables is, how much is the unbilled receivables is generated? This is the unbilled receivable. Whenever my invoice amount is more than the recognized revenue, deferred revenue. Whenever my recognized revenue is more than the invoice amount, then the unbilled receivables will be generated. Right? So when it will be generated and all these things will come here. So next steps will be that. So that time will come here. Instead of one day, it will be push out there. So the difference between the contract liability and the contract facilities, this is also will be calculated the same way, but the system will take the net due date. So we have generated the invoice value. Sorry, invoice document, billing document will be generated. In the billing document, we'll have the sum of the field is called as a net due date. So the system, instead of this is the one, the moment we have created the invoice, the value will be taken and will be considered. Suppose we are in the month of Jan 2024 and the net due date is in February 2024. If we are using the contract liability and the contract assets method, the system will not consider the invoiced amount and it will still not generate this deferred revenue. Deferred revenue will not be generated. It will show that both things in the contract assets only. The moment we are in the February month, then only the invoiced amount will be considered. Unless until the net due date is in the current period, the system will not consider that invoiced amount in the calculation of the contract liability or the contract assets. That is only the difference here. Here, based on the creation date or the billing date, it will consider, and here it will consider the net due date. That's only the difference here. So in RAR, we can use any method is here. We have a settings. Based on the settings, we can use it. Any method we can use it, and based on that one, the system will calculate it. Either you want to calculate the deferred revenue unbilled receivable or contract liability or this one. Right? So when we do the goods issue based on the event type, the system will generate will recognize the revenue, and then it will do the second step is it will do this one is here, and the third step is whatever the values that has been calculated, it will post the revenues here. So that is what in RAR people will call as ABC jobs here. The steps wise, if you see that, when we create an order, these are all RAR contract POBs, and these are all the values has been done is here. Because of we have a event based is here, so the system will not recognize any revenue. It will not do anything is here. Once we have done the PGI, the system will be communicated, and then it will recognize this revenue. That is the first step. It will do automatically. And the second step is calculation of this one. To calculate this one, we need to run the I'll mention the A job, B job, B job, C job is here. So the A job, we don't need it in this particular case. I'll tell you when it is required. So the A job will not be required. This is the functionality. It will recognize the revenue. And B job, we have to execute in the background. Then the system will calculate. These are the two things, either the deferred unbilled or contract cases or the contract liability to calculate. C job, it will actually, whatever the revenue and deferred or unbilled or contract liability and everything, it will post into the FI document. FI, as the accounting document will be posted. Right? So these are the things will happen is here in the system is here. So we'll see one by one we'll go. First today we have just a little bit to understand this one, and then how to activate from the SD point of view to send the data to RAR. So these are all, many are there. We'll take an example and we'll post it here. So I just introduced, and there are many variants also there. Don't jump onto that one over here. So I have never explained to the what is the A job will do. A job actually will do the transfer revenue, but when we do the goods issue is done, so that time only the recognized revenue will be transferred. But when we do need it, this one we need it in the time based on the second month onwards, or sometime time based case it is required. In the event based it is not required. And B job anyway is common on all these things. C job, this is the one right? So tomorrow we'll talk about classic and OCM version 2, the differences also. Now whichever is the project is implementing, they are using the OCM version only. So first we'll talk about the differences, and then from there we'll take it. Okay, so any doubts or any wavering this one on the today's class?
As of now, seems good.
Okay, correct.
I want to talk about the course content, right?
Okay.
I've seen the course content that Naveen has shared. Will you be going over only SD scenario? Are you also doing the BRIM? Because that is important for me.
Yeah. I do it from BRIM too. Let me see in the system, or it seems you have a system, or no?
No, I don't have the system. That system,
Okay. Yeah.
Naveen is.
Yeah. In the system it has, and we'll cover that too. So if you remember in the first few minutes of this one also, when I said that this is the operational document and first screen when I'm showing it is here, even though I concentrated more on use the terms of the sales order and all this thing, so BRIM also will follow the process almost the same, and definitely we'll cover that too. At the after covering of this one, we'll cover that one. Little changes are there, but the overall concept will be the same.
Okay, so we'll do a configuration, we'll do the posting and stuff, right?
Yes, correct. It's the only thing is integration only the different. Remaining all is the same. Okay. Here we are using the sales order. There we use the provider contract. Here we will use the goods issue. There we use the bid. Here we will use the invoice. There also we will use the invoice. So those configuration also will, other than that, remaining all will be the same. I'll show you that one is here. Don't worry.
And this presentation and documentation you have on this?
One presentation I have shown it to you, so those things I can forward it to you, but that's not prepared by me. And I have seen some of the few slides wherever I see that one it is good. So those things when I'm showing it to you. If you would like, I can send you those things. And what else you have asked for?
Is there any documentation of this?
You may any other material or something?
Yeah.
You can check with Naveen if he has any SAP material he can share with you.
You're going to tell Naveen to give the new system, right? You said that was not there, the date and all.
Yeah, almost is the same, but only thing is same. This is not the new version, so we can use the new version too. That's not my intention.
Okay.
But you can practice this one too.
Which version is
but
this?
if you have a new version,
You can see up, right? System and no system. Yeah, system status. Yeah.
Yeah. Hello.
Yeah, Naveen, hi.
Hi, Sashi. Tell me, Sashi. No, yeah.
So which
version is this one?
which version is this
So
one?
you're asking for the S4HANA version. Right now, what you're sharing is it's the 2022 version. So we have a
Okay.
new release 2023 also, right?
Yeah. So you can you just share that one?
Yeah. I'll share you in couple of hours. Okay.
That's fine. As
And
long
that
as it has got the BRIM and all, right, in it and all.
I think this
It's
has a
embedded, right?
BRIM, but
Everything is embedded in the same. Okay. Nothing special add on for this S4HANA. Okay. RAR and BRIM is embedded in this only. Okay.
No, because BRIM
and
has to
what?
be activated, right? You need the
Sorry.
industry. You need the industry. The BRIM solution has to be activated. FICA has to be activated. It's not.
We can do it, right? We can do it. Not a problem.
Hey, here is the question: is that is all any SD orders and the BRIM orders is created in other new system, or no? It is not yet created.
In the new system, you are saying?
Yes.
No. New system is a new one only. Okay. Like last week only installed. Okay.
Okay. No one has configured the SD, and no one has created any orders. Nothing.
Or might be that is a fully activated system. There will be some standard data, I guess. Okay, let me share you. You check it out. Okay.
No, I mean, 2022 is also good enough, right? I mean, if this system has got the data, then we can use 2022.
2022, if you don't have a orders, if you don't have any provider contracts, nothing has been set up. How do we use that one? So that's the problem, right? So we cannot spend long time on sales and distribution
that I
setup.
agree. Yes.
Yeah, that's a major thing, right? That's the reason I'm pointing out. If you have some order, a little bit changes or something, we can set it up. If completely set it up, it will take a very long time. Okay, but anyway, Naveen, you share that system too. Wherever it is required, we can have a look and then we can take it up.
Sure. Yeah.
Yeah, Naveen, please share that and share it with our trainer so he can take a look and he can confirm that it is all working, right? Yeah.
Mm-hmm. Yeah. So once trainer choose up a system, then we'll share to you. Okay. Yeah.
Okay.
Thank you. Yeah.
Yeah. So tomorrow also we'll have same time or any different time would like to have.
Next week we are meeting, I believe.
No, actually we cancelled yesterday, right? Okay. So to compensate that, trainer want to have a session tomorrow. Is it okay, or else shall we meet next week? Anything is fine with that, right?
We can plan with next week, Naveen. And
Okay, fine. That's good. Okay. Meanwhile, the event trainer also will check the server. Okay.
Yes.
No. Can you spend some time instead of giving a break for tomorrow? Second day itself, we'll have some very short session or something.
So in fact, next week on Saturday, we can have 30-40 minutes of extended session if you want.
Okay, that's fine. I think next week we'll have. That's fine.
Okay. Okay. Thank you.
Okay, Naveen, do you have any SAP material for this? Yeah, it seems I think he left the call, and you people can check with
I
him.
will check with them. Okay. Okay. Yeah.
Thank you. Bye.
Thank you.